tonight is well positioned. If you are launching regularly and successfully, there is business to be had. You can catch more of this conversation on Manifest Space, my podcast. Peter Beck, that's out today. You can catch it wherever you catch your podcasts.
All right, not yet quite subject to cyclical forces, the space industry, it seems.
Yeah, and even though, and actually Rocket Lab's up 28% since the start of the year. That's going to do it for us. Let's go out in the street. Tech Check starts now.
Good Thursday morning. Welcome to Tech Check. I'm Carl Quintanilla with John Ford and Deirdre Bosa. Coming up this hour, the growth debate, earnings versus econ. Some bearish commentary, some bullish data. What side of the market should you be on? Then this Tesla turnaround. Shares are surging after record revenue and that beat on results. Stocks up more than 40% in 2023. Later, an exclusive with the CEO of JetBlue as they swing to profit. Air travel demand returns post-pandemic. We'll get his take on the consumer in just a moment, Dee.
Well, let's take a look at the market as investors digest a slew of earnings and economic data this morning. Right now, as you can see, the Dow Industrial is up about 1/3%, but really it's the NASDAQ that is continuing to be the outperformer, though coming off some of its earlier gains today. Of course, Tesla is on a tear here. Energy and consumer discretionary, those are your sector winners today. Energy led by Chevron after announcing a huge share buyback. On the flip side, the so-called safety trade, risk-off trade, moving lower with consumer staples and healthcare lagging. John?
All right, let's start with the deluge of data and earnings. The headline economic data, keyword headline here, coming in strong. Durable goods surge, GDP beat estimates, and jobless claims remain low. But on the earnings front, we're halfway through the season, and corporate America isn't painting the soft landing picture that the econ data, well, might be. Dom Chu, can you sort through all this for us?
We're going to sort through all of this for you, John. So we're getting close to that halfway point in the season right now. So a little bit over a quarter of companies in the S&P have reported their results. And to John's point, it's been a very mixed picture because we do know that analysts tend to take down their expectations for companies ahead of earnings season. So when they do come out, they're perhaps trying to beat a lower bar, if you will. But according to data from Refinitiv, what we have right now is a surprise factor. That is, with the companies that have reported, how many have beaten estimates? Well, 69% of companies have reported better than expected earnings. And the surprise factor, how much they've beaten by, is roughly 2.5%. So analysts are relatively on target with their revised targets. Revenue is pretty much in line, just about 0.5% better than what analysts were looking for. Now, this is the number I want to key on. This is the blended earnings and revenue growth rate. So if every single company in the S&P reports as expected for the rest of the season, the S&P
here's the
down 2.7% versus the same time last year and up about 4.2% on the revenue side. Now, the commentary, though, is where things get interesting because everybody's being a little bit more cautious, and maybe you can't blame them these days with all the uncertainty in the economy. We've selected a few different quotes to kind of go through to give you an idea of what we're talking about. Sir Sherwin-Williams earlier today basically saying we will not be immune from what we expect to be a very challenging demand environment in 2023. Visibility beyond our first half of the year is limited. That's Sherwin-Williams, paint home improvement. Now let's cycle through to another one. On the consumer side of things, take a look at what Macy's is saying. Based on current macroeconomic indicators and our proprietary credit card data, we believe that consumer will continue to be pressured in 2023, particularly in the first half of the year. And then, of course, this is Tech Check, so let's put a tech name up there. A semiconductor equipment maker like ASML, basically saying there continues to be a lot of uncertainty in the market due to a number of global macro concerns around inflation, rising rates, recession, and the geopolitical environment. So I guess, John, the point being here, the results are now beating lowered expectations, but they are still beating. That's a good sign. But you do have people trying to set the expectations a little bit lower, especially in that first half of the year.
And that's the gray area I want to deal with. There are 3 months in a quarter, and Macy's talked about a really slow December. After Black Friday, Cyber Monday, all of that, really tepid on the buying side. Microsoft actually said something similar. And then the guide, right, is where Microsoft, at least at first, really got hit. When we get these GDP numbers, there's no guide in those. We're backward looking and we can't separate the months the way you can with earnings.
So the earnings become, they're not as, they're as high frequency as GDP data is, right? Because it's quarterly. You'll get the quarterly look every single time. But what you do have from commentary is it's the responsibility of a company manager, especially a public one, to whenever
this next 4 minutes is everything.
Outlook, they have to kind of revise and tell people that's their responsibility from a
We need
fiduciary
a
standpoint.
bullish
So you'll get a little
continuation
bit
right
more
here.
high
And
frequency
if we
data
get
on
it,
that
I'm
point.
gonna take a
But
long
what you do have at the
position.
same time is a number of companies who are cutting back on the kinds of data they give you. Oftentimes they'll forecast certain things. Netflix, for instance, not giving forward-looking subscriber data as much going forward. So a lot of these companies are trying to cull back a little bit of what they give out, but there's still higher frequency data to be gleaned. And by the way, if you take a look at the revenue growth rates that I talked about, the tough part here, Deirdre, John, is we know how hot inflation has run over the course of the last year. So how much of that revenue growth really is true organic revenue growth versus how much of that is just the fact that they're charging higher prices because prices are higher in general?
And that comes down to the fundamentals, which is going to be such an important focus for the months and quarters ahead. Don, when you look at what happened with Microsoft yesterday, there was that disappointing guidance on the Azure front, yet the stock, almost turned it around by the end of the day. What does that say about the big tech earnings coming up and maybe enterprise spend as well? I mean, investors are certainly finding reason where they can to be bullish in this market, even as many expect a recession in the months ahead.
What's interesting about that is it's a little bit of a blend of micro and macro, to your point, Deirdre, because we haven't yet hit that massive tech earnings season, right? We got Apple coming up, Alphabet, all these other big ones, Amazon coming up next week. What you have is a jockeying for position right now. You've got some solid data coming out from the likes of Microsoft, but it doesn't paint the full picture. It has been predominantly bearish, there's no doubt about it. So as people start to look at the way things are shaping up, in the NASDAQ 100 at one point yesterday in the afternoon, I think we looked at it, there were 9 stocks in the NASDAQ 100 that at roughly 2:30 in the afternoon had rallied at least 5 to 10% off of their intraday lows. And they included the mega cap tech names and some of the big EV makers like Tesla. So it might just show you a little bit of the sentiment right now about how investors are in this kind of weird phase about the fear of missing out thing and also being a little bit more cautious. So you don't have as much of the career long or short view on tech stocks as you would maybe in other times.
Yeah, we're going to keep getting more data. Dom, thank you.
Sticking with earnings, let's dive deeper into Tesla this morning. Quite a day for the stock. Take a look. Top gainer on the NASDAQ following that beat on the top and the bottom line. Elon Musk covered a lot of ground on the call last night. Talked about demand. He talked about Twitter. He talked about the potential for a recession. Take a listen.
My guess is if the recession is a serious one, and I think it probably will be, but I hope it isn't. That would lead to meaningful decreases in almost all of our input costs. So I would expect to see deflation in our input costs most likely, which would then lead to better margin.
How should we be reading those numbers? With us today, Bernstein Managing Director Tony Sacconaghi joins us with an underperform price target of 150. Tony, good to see you. There's been quite a push-pull debate about these price cuts and the choices between volume and margin. Sounds like you think there is a mix for everybody.
Correct. Good morning, Carl, and thanks for having me on. Yeah, I do think that the earnings yesterday and the earnings call did offer something for both bulls and bears. On the bull side, Tesla reaffirmed its belief that it's going to continue to grow really strongly, guiding for almost 40% unit growth, and seemed very committed towards achieving that and continuing its expansion in terms of production capacity for both cars and cells. On the flip side, the margins were much worse than investors had forecasted. Automotive gross margins, adjusting for one-time events, which the street typically does, were about 23%. Consensus estimates were 26%, so they were well below. And this is before the big price cuts occurred in January globally. And so, certainly there's some possibility that gross margins could be a lot lower, less than 20% at some point in this year. And they were 30% a year ago. So we've really seen a fundamental change in profitability, and that plays to the bears side.
Right. What do you think happens? How do you judge the stock? And I know this is very difficult, but how does it trade before we get this analyst day in March?
Look, I think the data point that people will be tracking is how weekly shipments are doing and whether Tesla's backlog continues to grow. When we really saw pressure on the stock was when Tesla's backlog started to go down because that was signaling that orders weren't strong. And conversely, if Tesla's backlog is growing, that means that orders are at least as good as production. And so I think that's the key metric. Now, if backlog grows and continues to grow, Tesla may raise prices, and that would be very bullish. And the converse is true. If orders seem to be slowing and backlog is not growing, Tesla may be forced to cut price, particularly in China, going forward. And I think that's really going to shape investor sentiment over the next couple of months.
How many data points on that, Tony, do we need before you think you feel pretty certain of how demand for Teslas from the consumer side is trending?
It's a good question, John. I think this is dynamic, right? There's obviously a surge in demand because the price cuts were just announced, and there is a chance that the IRA credit will actually get less after March 1st. And so there was pent-up demand, and people want to be sure they get this price and are able to qualify for the IRA tax credit. So demand is very strong now, and we're gonna have to track it. And part of it is the trajectory. I think ultimately any kind of price change globally, one way or another, will really be reflective of that, and that's going to be very key, I think, to investor sentiment over the next 3 and 6 months.
Tony, it's Deirdre. Good morning. How do we put these discounts in a broader perspective? Are these discounts, do you think they could lead to the first EV price war? Does Tesla win it? You said that you could envision a scenario where Tesla raises prices again. It's doubtful that the other EV makers could move that quickly or be that agile.
Right. Yeah. So it's another really good question. I do think that Tesla has fired a shot across the bow in terms of its prices for the EV industry and the car industry more broadly. And we are going to see intensifying competition. And generally, that's not great for all industry participants. I think one of the fundamental debates around Tesla is this a car company or is this a technology company? And, I've always believed that principally at its core, it's a car company. And the automotive industry is a brutally competitive business. There are 10 large competitors. There are 5 new, well-capitalized EV players that have entered the market. So we're going to have 15 players. It's a global market. Historically, car makers have not been able to take price. And so this is an instantiation of that, where we're actually seeing arguably the market leader in electric vehicles taking big price. That's gonna create reactions, and that's gonna make the industry even more competitive going forward. And ultimately, that's why I believe Tesla is more a car company. And with gross margins, approaching 20% now, that is what a traditional car company gets, is somewhere in the 15 to 20% gross margin. So that I think this is a shot across the bow to the industry, but generally it's not a good shot because it's going to engender others to be more competitive, and that's ultimately the tough part about the automotive industry.
Yeah, you point to the historic, the lifelong thought that all OEMs eventually come to the same margin and multiple, and that's what makes Tesla so interesting right now. Tony, thanks so much. Good to see you.
Thanks for having me.
Still to come this hour, we will get earnings from our parent company, Comcast, as well as MasterCard. Plus, JetBlue shares moving lower after results, but that stock is up 27% this year. We will speak with the CEO exclusively ahead. Check is just getting started. Don't go away.
To measure up. So yeah, we did. When life slings you mud, sling it right back. Stay strong. Toyota trucks.
Toyota has the lowest 5-year cost to own of all brands for 2022. Find yours at Toyota.com. Toyota, let's go places.
Life gets bigger when you break from the herd. The Volkswagen Tiguan. Visit your Tri-State Volkswagen dealer today to learn more about our vehicle lineup.
At Bombas, we make the comfiest socks, underwear, and t-shirts that feel good and do good. Because when you purchase one, we donate one to those in need. With 75 million donated so far, that's a whole lot of good. And good. And good. And good. Visit Bombas.com and get 20% off your first purchase. Bombas.
When I started Bright Star Care, I had one focus: to provide a higher standard of care. Safe, reliable, nurse-led care right in people's homes. That's been my goal for 20 years, and it always will be. Now, local agencies are looking for experienced nurses and caregivers who have the passion it takes to deliver that higher standard of care.
Like this, and this, and this. Get 30% off your first month at trykimco.com.
Why is everyone talking about Navage and nasal irrigation?
I am one who suffers from chronic sinus infection.
You need to clean that crap out of your nose.
Navage is simple. Your nose is the body's air filter, but it's not perfect. Navage is a drug-free way to help flush out allergens, mucus, and germs using powered suction. Join nearly 3 million Navage users so you can breathe better, sleep deeper, snore less, and stay healthier.
I love this thing.
It's nice to breathe. Navage, clean nose, healthy life.
From tropical bites to cowboy delights, Nuts.com has over 1,400 delicious snacks to satisfy every craving. Enjoy every flavor of happy and get free shipping on your first order.
Welcome back. Our parent company Comcast with results today. Cord cutting and cable subs definitely in focus. Julia Borston has more on the numbers, Julia, on a day where stock almost got back to 41. That's the highest since the summer of last year.
Yeah, that's right. Comcast shares moving about 1% higher after the company reported better than expected revenue and adjusted earnings per share. Growing losses around Peacock and the World Cup were balanced out by lower capital expenditures than analysts had anticipated. The company did lose fewer broadband subscribers than expected. Excluding the impact of the hurricane, it would have added about 4,000. But CEO Brian Roberts addressed concerns about slowing broadcast growth, saying that he is optimistic about an increasing market opportunity.
But if you just look at even Thursday night and the NFL being on Amazon, that creates a lot of broadband usage. So we want to be a company that is uniquely positioned to capitalize on these macro changing trends.
The company reiterated its commitment to ad-supported streaming service Peacock, which added 5 million subscribers to top 20 million in the quarter, saying that they expect a peak of $3 billion in losses this year for the service. NBC Universal's chief Jeff Shell weighed in on the ad market, saying it seems to have bottomed at the end of last year and that they do expect an ad market recovery in the second half of this year. Carl?
Pretty interesting. Theme parks, we've talked a bit about how they're expanding their presence around the country, really, but in terms of revenue at theme parks, it's hard to find a year that was better.
Yeah, I mean, it's just amazing. With so many questions about inflationary pressures, the health of the consumer, theme park revenue grew 12%, and they are continuing to invest in the space, really seeing it as a long-term growth opportunity. Obviously, it takes a long time to build these parks, but this is an area where they see increased spending and attendance, so certainly one they're betting on going forward.
Yeah, a lot to slice up regarding our parent. Julia, thanks. We'll talk to you in a little while. Our Julia Borston. John?
Yeah, well, coming up, airlines have been some of the highest flyers in 2023. A slew of names reporting this morning: Southwest, American, Alaska, and JetBlue, which is up about 26% this year. The CEO is going to be with us in an exclusive interview from the company's New York headquarters. Don't go away.
There's a different way to treat HIV. It's every other month injectable Cabenuva. For adults who are undetectable, Cabenuva is the only complete long-acting HIV treatment you can get every other month.
Cabenuva helps keep me undetectable. It's 2 injections given by my healthcare provider every other month.
It's one less thing to think about while traveling.
HIV pills aren't on my mind. A quick change in my plans is no big deal.
Don't receive Cabenuva if you're allergic to its ingredients or if you're taking certain medicines which may interact with Cabenuva. Serious side effects include allergic reactions, post-injection reactions, liver problems, and depression. If you have a rash and other allergic reaction symptoms, stop Cabenuva and get medical help right away. Tell your doctor if you have liver problems or mental health concerns, and if you are pregnant, breastfeeding, or considering pregnancy. Some of the most common side effects include injection site reactions, fever, and tiredness. If you switch to Cabenuva, attend all treatment appointments.
Every other month, and I'm good to go.
Ask your doctor about every other month Cabenuva.
Open up to Tommy John. Choose feature-packed underwear and intimates to upgrade your day every day. Try them now risk-free with our best pair guarantee and experience what confidence feels like. Go to TommyJohn.com now and get 20% off your first order with code TV20.
To the good old days. We did have some good times.
This is my home.
You start walking in this direction or you start running in the other one.
I'm well trained in the art of grown-up karate.
A bank that knows your business, grows your business. BMO.
CNBC CEO Council, the preeminent collective, convening today's chief executives to tackle tomorrow's business challenges. From the Motor City to Silicon Valley to Wall Street, dynamic dialogue during pivotal moments. Powerhouse founders, titans of tech and finance, newly minted large cap leaders. If you're a CEO, you want a seat at this table. Visit cnbccouncils.com/CEO to apply for an invitation.
Welcome back. A number of airlines out with results this morning. The sector has been an outperformer to start the year. Many names 20 to 30% higher. JetBlue, one of the companies that reported today. Let's get over to Phil LeBeau, who joins us with the CEO in an exclusive interview. Phil, over to you.
Thank you, Deirdre. Robin Hayes, CEO of JetBlue, joining us on a day when you beat on the top and the bottom line. Robin, we knew that the fourth quarter was going to be strong, but your stock came under a little bit of pressure this morning on your Q1 guidance, which you guys are expecting a wider than expected loss relative to the street estimates that are out there. What's the difference there? Why? I know it's a weak quarter historically for you guys, but why are you expecting wider than what the analysts are expecting?
Hey, good morning, Phil. Just a couple of things. I mean, I really think it was a timing issue, because if you look at the full-year guidance we gave, it was pretty much in line, if not slightly better than what people were expecting. I know traditionally Q1 is our weakest revenue quarter. You know, we are a Northeast-based, predominantly leisure airline. So you know, some of the revenue estimates were higher than what we have guided to. But our guide of 30% year-on-year revenue increase for the quarter is very consistent with what we were seeing, the revenue strength we were seeing last year, and is actually completely normal to what we normally see, the difference between our Q4 and Q1 revenue if you look back to 2018, 2019. So we continue to see great revenue strength, and on costs, it was really a question of just timing. What we guided cost for the year was very much in line with what we had said previously.
Hey, Robin, the pent-up demand that was so much a part of what fueled the success you had in the last year, how much of that has played out in your opinion, or do you expect that to extend into the summer? And by extension, are you reassessing your capacity and your schedules because that demand remains as robust as it is?
Yeah, demand is really robust across the board, and we've seen that. You know, we have seen some plateauing of business travel demand since the end of last year, but you know, most of what we carry is leisure traffic or people visiting friends and family. That remains very, very strong, Phil. We expect it to continue. You know, I think it's two things. I think it's a combination of, yes, there's still people who haven't taken trips that they wanted to take. But you know, if you look at the biggest proxy for revenue in the airline industry over time, is GDP. And if you go back to 2019 and you look at how much GDP has grown between 2019 and 23, we're still at a point where the capacity in the industry is significantly lacking that. So I think that is also partly the explanation. In terms of our capacity guide, you know, we don't expect it to change very much. You know, we are still suffering from aircraft delivery delays, and so we've had to reflect that in our capacity guide. And also, we continue to plan and operate very conservatively. I couldn't be more pleased with how well the team has done in the second half of the year. Our completion factor in December, which is the percentage of flights that we schedule that we actually complete, was the best in the industry. And so we're going to continue to plan more prudently, bring our aircraft utilization down from 2019 levels, and that's also going to act as a moderating impact on capacity.
Robin, a big growth driver in the future for you guys is the proposed merger with Spirit. We haven't heard yet how the federal government is going to weigh in on this in terms of if they ultimately decide to fight it. What's your sense in terms of a roadmap? When you will get a better sense of, yeah, we think we can get this completed and we can incorporate Spirit into JetBlue. What's your time frame at this point?
No, thanks, Phil. So we've said that we're still assuming that we can financially close on the transaction in the first half of next year. We're working through the regulatory process now. Obviously, that's something that the Department of Justice is rightfully in control of. But assuming that we can complete in the first half of next year, it's going to probably take us another year to get the single operating certificate. And what that means is that we can bring the two airlines together and operate it as one. And there's going to be another few years after that before all the Spirit airplanes are reconfigured into a JetBlue specification. So as you know, with other airline mergers, it is definitely a multi-year process.
Absolutely is. Robin, thank you very much for joining us on a day where you beat on the top of the bottom line. Guys, you heard there from Robin himself. We've heard this from almost every airline CEO. The demand remains very strong. And I know a lot of people are saying, what happens if there's a recession? They're just not seeing that in terms of their forward bookings at this point.
Yeah, certainly an interesting point to take into effect, especially if we are heading into a recession. Phil, great stuff all morning on the airlines. Thank you for that. Coming up on the show, after Microsoft invested billions in ChatGPT's parent company, the AI arms race is heating up. We will look at some potential M&A targets in the space. Tech Check remains in just a moment.
You're hoping to retire? Well, hope isn't a good retirement strategy. You've worked for a comfortable retirement for years. Now you need to plan for retirement income. Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track.
Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement a success, including the Investor's Guide to a Comfortable Retirement, 13 retirement blunders to avoid, and maximize your Social Security. Call 1-800-759-4477.
Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better.
Call now for your Comfortable Retirement Kit. Call 1-800-759-4477.
If your retirement portfolio is $500,000 or more, call us today. You don't have it coming to you unless you plan for it.
Call 1-800-759-4477.
Hunger is here. I'm going to open the box, and my refrigerator is packed.
You deserve a better credit score.
Whoa.
Chime can help no matter where you're at.
Whoa. Because with everyday purchases and on-time payments,
Whoa.
things can happen a lot easier.
Whoa.
Whoa. Whoa. Oh, you deserve some credit.
Whoa.
Get started at Chime.com.
Why is everyone talking about Navage and nasal irrigation?
I, along with suffers from chronic sinus infection.
You need to clean that crap out of your nose.
Navage is simple. Your nose is the body's air filter, but it's not perfect. Navage is a drug-free way to help flush out allergens, mucus, and germs using powered suction. Join nearly 3 million Navage users so you can breathe better, sleep deeper, snore less, and stay healthier.
I love this thing.
It's nice to breathe.
Navage. Clean nose, healthy life.
Welcome back to Tech Check. Couple hours into the trading day, get a check on the markets here. Definitely circulating just north of 4K on the S&P here. The Dow waving in and out of red territory. Strong GDP number this morning. NASDAQ up 3% for the week, on pace for the best month since last July. Top of the S&P today is going to be Tesla. Record results, and that beat on revenue did send the stock higher this morning, up more than 40% just this year alone. We are watching Chevron as well. Obviously, that buyback last night, $75 billion, got some pushback from the White House, something we will get to in just a moment. Meantime, we just heard from the CEO of JetBlue. Southwest continues to fall in today's session after posting that $220 million loss in Q4. A lot of news on the airline front today. Let's get a news update with Contessa Brewer. Hey, Contessa.
Hey there, Carl. Here's what's happening right now. Russia has launched another wave of missile and drone attacks across the Ukraine. Just yesterday, Western nations announced they're ramping up support for Ukraine and promising to send dozens of battle tanks. Ukrainian officials say 11 people have been killed, another 11 wounded in the current attack. On the West Bank, one of the deadliest days of fighting in years. Palestinian officials say Israeli forces killed 7 gunmen and 2 civilians. A battle broke out after a rare daytime raid by Israel's military, which reportedly targeted a militant group accused of carrying out attacks on Israel. UN and Arab mediators have opened talks with Israel and Palestinian factions. They're hoping they can prevent an escalation of this violence. And an asteroid as big as a delivery truck will just barely miss hitting Earth this evening. NASA says there's no chance of impact, but the asteroid will pass just 2,200 miles above the southern tip of South America. This marks now one of the closest approaches by a near-Earth object ever recorded. It's somehow very disconcerting to talk about a close call when it comes to asteroids, John.
Metaphor for the economic numbers getting lately. Contessa, thank you. ServiceNow out with results last night. Free cash flow up 37% to $1 billion. The stock flat this morning. I spoke with ServiceNow CEO Bill McDermott after the earnings call about what it takes to grow in this environment. Take a listen.
So only the strong will survive. And I believe we're in a platform market now where point solutions can do well if they're the best one. But if they're an also-ran, they're going to do bad. And I think in the platform game, we're one of maybe 5 platforms that really matter in the enterprise. And because of our size and speed, I think it does give us a great advantage to expand swiftly.
McDermott told me he's not going to do big M&A. It's about organic growth, but ServiceNow might be an outlier as companies continue to invest in next-generation technology, especially AI. Who are some potential takeout targets? Frank Holland has that for us. Frank?
Hey there, John. Well, IBM and ServiceNow both did say the demand for cloud and software remains strong into year-end. Cloud optimization and Microsoft's open AI investment, a big question for IBM. CEO Arvind Krishna saying he's leaning into AI and to expect M&A.
Leveraging AI deep inside our products is another example of where we have a unique capability. Consequently, we're going to remain pretty focused on these areas. You should expect both organic and inorganic investment.
All right, one possible target would be C3.ai, according to Wedbush. The AI enterprise software maker that works with Microsoft has far outperformed, rising 32% year to date, but still remains more than 40% off of its high. AI player Sumo Logic has risen more than 40% year to date. Big spike following reports Thoma Bravo and Vista are eyeing Sumo for a take-private deal. wide range of customers for them, from Fidelity to Clorox. Splunk is a data analytics player that's long been rumored an M&A target, high valuation name that Cisco reportedly tried to acquire last year. John, back over to you.
Lots of rumors about Cisco. There's that HashiCorp rumor out there too. We'll see if they actually do any of that. Frank, thank you. Now, despite last year's M&A drawdown, our next guest sees potential growth on the horizon. Let's take a look at last year's U.S. venture capital deal value. That number still surpassed 2020, previously the biggest year on record before the 2021 spike, according to PitchBook. Joining us now live on set at CNBC headquarters, Madrona Managing Director Matt McElwain. Madrona has been an early investor in companies like Amazon, Snowflake, and Smartsheet. Guest on set. It's been a while. It's good to have you here.
John. Great to be with you.
Let's talk about M&A and how this plays out. It gets talked about a lot. People are excited about ChatGPT, but ChatGPT isn't making any money.
Well, ChatGPT isn't making any money, but companies like Jasper.ai that are built on top of ChatGPT-3, which is also from OpenAI, are making a good bit of money. It is super early days. But I think the analogy here is like what Mosaic browser, which became Netscape, is to the internet. ChatGPT is to AI. It is unlocking a connection in a way that's never happened to the end user. Even though we all experience AI in our lives, we use it with recommendations from Spotify, Netflix, even a result from Google search is an AI result. But now with generative applications, we're actually making things. We're creating content, we're creating writing, we're creating code. And that, I think, is going to unlock not only a whole run of innovation here that'll be the most transformative since the cloud, but it's also going to make big companies hungry to buy smaller companies.
But that's what I'm trying to figure out from the investor perspective is, when are we going to get that super app, that sort of use case that shows the direct value of AI? Up to this point, we've had, features in iOS. We've had Alexa that shows, Google Assistant that shows, AI is being used there, but I'm kind of getting a benefit for it without having to directly pay for it. When are we going to see companies directly paying for it and getting a revenue boost because of that?
Well, I think that you've got both the AI native companies, right? And then you've got AI embedded into workflows. And so there's all kinds of these intelligent apps for AI native companies. Companies like Gong or companies like HighSpot. These are all late stage private companies that are leveraging AI today and actually making a solution better. But then you're starting to see these standalone applications. Companies like Stable Diffusion, which is unlocking a whole bunch of areas, and companies like Runway ML, which could completely compete and take on Adobe over the next 10 years. We're investors in Runway ML, absolutely amazing company. It's going to reimagine through the power of AI native ways that you do content creation and content editing.
One of the highest potential areas, at least that I see, you mentioned Gong, is kind of adjacent to CRM. Like if you can speed up the sales process by helping to write that pitch or helping to analyze which customers are warmer leads, especially in this environment, boy, that's bad. If I don't have to hire more salespeople in order to generate more sales, that'd be great. Can AI do that?
Absolutely. So you're thinking about what's the thing that can do the first creation. Think about like an intern or an agent that's going to help you along your way. In this case, it's automated. Maybe the best example actually is Copilot. So Copilot is a service that OpenAI and Microsoft built together on top of GitHub, which Microsoft owns. And it helps you generate the first draft of your software code. Write me a Python script, for example. And I've talked to not only very established software developers, but students in college that say it's helping them be 30 to 40% more productive. That's real productivity. And with the millions of software developers out there, I think things like Copilot, which is made by by Microsoft leveraging OpenAI, or Code Whisperer, which is AWS's version of this, those are really going to be an early example of both monetization for those providers and productivity for those users.
Well, across things like CRM and DevOps tools, Microsoft has a bit of all of it, as well as OpenAI in that state. So
that's right.
They'll get a chance to at least prove that out. Matt, thank you.
Thank you very much.
Now, as we head to break, check out shares of Intel spinoff Mobileye higher after top and bottom line beats. The company swinging to a profit. I guess they could be swimming to after reporting a loss in the same period last year. And speaking of Intel, do not miss an interview with CEO Pat Gelsinger tomorrow. right here on Tech Check. Intel reporting today after market close. Stay with us.
And then she was like, huh? And I was like, I know, right?
Neat story. Take a break from boring with the BetRivers Casino app.
It was a boring story.
Featuring live dealer games like live dealer blackjack and lightning roulette, we bring the excitement to you. Plus, with our award-winning customer service, we're the first name in fun.
Cool sign.
I know, right? Take a break with BetRivers and live dealer blackjack. It's a whole new game.
During economic uncertainties, you've got to be able to see around corners and run a tighter ship. Being able to make better data-driven decisions with all of the data that swirls around the enterprise has never been more important.
Companies are moving from the thought process that only analysts have access to data and can help make decisions, when in fact the reality is that people across the entire enterprise should be empowered to make good business decisions.
Hi. Seriously? It's just a bike. Wait, they make a treadmill and then two with its speed knob?
Yeah, want to try?
92% stick with it. So can you. Rent a Peloton bike or Bike Plus. Terms apply.
Buying or selling a home can be one of the most stressful moments of your life. But it doesn't have to be. HomeLight is here to change that. HomeLight combines the best technology and agents onto one modern real estate platform. Join the millions of people who have used HomeLight to make buying and selling simple. It takes 2 minutes, and best of all, it's free. Buying and selling has never been more simple. Start today at homelight.com.
This is Annie. She loves dogs, so she started a school for dogs.
Our staff was growing, our space was growing, and we needed to have more money in the bank.
Annie needed a loan. Enter smartbizloans.com. We found them a bank which got them an SBA loan with a great rate, and we made the process easy. We've helped over 230,000 small businesses get over $9 billion in funding.
It was fast, it was easy, they were super nice, and I got the loan. We're all happy I did.
We can tell. Apply today at smartbizloans.com.
Private market alternatives help you outperform the traditional portfolio by up to 40%. Meet Yield Street, the leading private market investment platform with 10 highly vetted asset classes. Diversify with alternatives. Open an account at yieldstreet.com.
Welcome back. This morning, Chevron announcing $75 billion in stock buybacks and a dividend hike, much to the dismay of politicians in Washington. But big oil companies are not the only ones buying back stock in massive chunks. Our Bob Bassani is back looking at what other programs stand out, at least to you, Bob.
Techs and banks are really doing a lot of buybacks as well, but is it making a difference? You know, buybacks have become an important part of returning shareholder profits. Last year, about $980 billion was spent on buybacks for companies in the S&P 500. About $560 billion was spent on dividends. Big difference there. Wall Street loves buybacks for two reasons. It provides immediate gratification because the company is buying back shares right on the open market. Everyone can see it. And the buyback can be adjusted down if the cash flow declines. On the other hand, dividends, by contrast, are a lot stickier. But there's a big problem with buybacks. They are supposed to reduce share count to improve earnings per share. That's the purpose. But in many instances, there is no share count reduction because the companies issue new shares as options to executives and to pay for M&A activity. However, some companies really do reduce their share count. I call them buyback monsters. Some oil companies have been very active in the last year buying back stock. Marathon Petroleum and Marathon Oil. Look at the share count reduction. And some of the big financial companies last year were very active. AIG, Wells Fargo, Morgan Stanley all had significant reduction in their share count. And by the way, some big tech companies, they've been very aggressively buying back shares for many, many years. I call them the kings of the buyback monster squad. Apple, Microsoft, Alphabet, Meta, and Seagate, and Carl. Just to give you an idea how big Apple is. Apple is probably 10% of all the buybacks last year. $100 billion. We don't have a final number. We're waiting for that because they'll announce it. But I think it's going to be $100 billion. That's about 10% of all of the buybacks, and they really are reducing share count.
And Chevron's about 20 of the float, right?
Yeah, it's 20%. 75 billion would be $350 billion flow. Chevron, they have bought back $16 billion in stock in the last 5 years. Their share count has not gone down.
Right. So this idea that we're witnessing the creeping LBO of the stock market, we talked about that for years.
Yeah.
You think that's a misnomer given the way it's used for comp?
No, it's not. It's Wall Street is a master at this. Wall Street is a master at, we're doing M&A activity and we're offering compensation to our executives. That's what we have to do to attract talent. And so it's the giant hamster wheel, and that's the problem that I have with it. Traditional old school investors like dividends because it's cash in hand. You're getting real money back, not some promise, oh, we're reducing the share count, and then it doesn't get a share count reduction. Remember, earnings per share are supposed to improve when you buy back stock. That's the purpose of it. And if you just go on the other end, as you used to say, draining the pool and then filling the pool at the same time, it doesn't really work. That's why you want to look at those companies that really are the big buyback monsters, the tech names that are out there.
And hopefully we'll get more color from Chevron tomorrow.
Yes, I think they have a little, it sounds like a good thing. They're returning money to shareholders, but they have a little explaining to do about how they're doing it. And obviously Washington's not happy about it.
Exactly. Thanks, Bob.
Okay, pleasure.
Good conversation there. Up next, remarkably resilient. That's how the CEO of MasterCard is describing the consumer. We'll have how to play the payment space when Tech Check returns in 2 minutes.
Hi, babies. What you doing?
I'm trying to get myself getting
Yeah.
Yeah, my dad ended up he was calling insurance to try and see how much, because obviously I drive the car.
Yeah.
Worry if something happened or whatever, you know.
Yeah.
So I guess he was calling to see how much it cost to add me to the policy.
Yeah. Yeah.
They're like, crowd insurance. I'm like, yep.
Yes, you do. Chicken and rice. Chicken and brown rice.
You eat it?
Yeah, I'm just breaking the fast right now. Just need like against the brown rice and that piece of chicken.
Okay.
Yeah, it's trying to. My stomach's better, but it definitely still feels a little weird. But I just gotta take it easy.
Owen had the runs yesterday, apparently.
Yeah, it's definitely running through the house. The runs is definitely
It must be just the virus or whatever, you know what I'm saying?
Yeah, I don't know if Michelle had it, but I mean, I definitely had it. You had it.
No, my stomach's been a hot mess.
Yeah. It definitely wasn't just your period either.
No, I don't think it was.
Yeah. Because the way you described it, it's pretty much exactly what I was dealing with. It's just super gassy and just felt like there was a block in my stomach.
It feels weird.
Yeah.
I mean, I still have been getting the runs, and I'm not eating bad, you know what I'm saying? So
Yeah.
That runs.
Yeah.
By all means, I don't eat perfect, but not anything that.
Yeah, you definitely don't eat bad though. You never eat bad. Occasionally, you'll have a sweet or something, but that doesn't, I don't think that that's that excessive.
I think the worst thing that we had was on Sunday.
Yeah. Pretty much.
Yep.
Pretty much.
Yeah, it is. I think it's also, I gotta take a shower, I guess, after I work out.
Yeah.
Because sometimes, but I guess my body feels it, and it feels so off.
Yeah.
It's can't ignore that shit.
Mm-hmm. Yeah, definitely count.
Folding laundry for him.
Nice.
Yeah. Oh, I should have pulled the hat out. God damn it.
It's like pouring right now.
Is it? It was sunny.
Yeah, it was like raining and it was like super windy too. I feel like howling.
Fucking great.
Definitely windy as shit.
I literally am like sweating. I'm like, what the fuck is wrong with me? I'm like, oh my god, I didn't take my Suboxone. I'm like, what the fuck is wrong with me?
I do that same dumb shit all the time.
I just want to be, like, I'm so over it at this point.
It sucks.
I'm right there.
I know. It's terrible. It's just like, it's an inconvenience and it's just fucking scary.
Well, me off fucking forever ago, let's be honest.
Yeah.
He kept me on that shit forever.
Oh, yeah. Ridiculous. It really is just fucking ridiculous. Whatever.
You know what's crazy? It's like, not for nothing, but like, I think because of the language barrier, you don't really get to see, obviously, what my mom's like. But my mom's not easy either. Like, my mom was coming at my dad yesterday.
Yeah.
Like, talking about the price of something. She's like, you should charge more. You should leave this. Like, Mom, shut the fuck up. Like, tell me in the comments that you don't.
Oh, God. No.
Like, infuriates my dad. My mom's, like, winking at me. I'm like, yo, you're, like, just starting trouble for no reason.
Oh, so that, at least now I know where you get it from. You have to get it from somewhere.
I mean, the seriousness I get from my dad, if you can't tell.
Yeah, definitely.
Like, I have to have a certain type of way. My dad's very much like that.
Yeah.
And my mom's like, my mom means well, but she has mood swings and she doesn't realize it.
God damn it, dude.